Yo guys, welcome back to Stock Talk Insider. Today I'm sharing my full investment portfolio and long-term plan. My total portfolio sits at 54,000 euros, which is around $58,600, and includes 16,000 euros in cash from the Tesla position, which is around $17,400. Out of that total is 22,000 euros or $23,900 in profit. I started investing in September 2023 and I'm now approaching 2 full years in the market. Yes, I started during a bull market, but I've had to learn the hard lessons of conviction, volatility and patience. I began with 70% in the S&P 500 ETF, a safe start, but now I've fully transitioned into individual growth stocks. Why? Because I'm 22, I still live at home and working a full-time job. I can afford calculated risk and the time to be aggressive is right now. My short-term goal is to hit 100,000 euros by June 2026, which is just 11 months from now. That means doubling down and pushing smart capital into high-quality growth. Some might laugh when I say I want to become a millionaire, but here's the thing, as your capital compounds and the numbers get larger, growth accelerates. The first 100,000 is the hardest. Once you hit the milestone, the next 100,000 becomes faster, and so on. I plan to stay living at home a while longer to maximize my monthly contributions, and if I hit 100,000 in under 3 years by the age of 23, I've already reached 1/10 of the millionaire goal. That's the power of consistency, time, focus, strategy. The journey only gets faster from here if you keep fueling it. What's also important to mention is that I previously held a Tesla position worth 17,000 euros, which I sold without gains. I decided to exit because I don't yet see conviction playing out over the next 4 years, and I prefer to invest where I see clearer upside. So in reality, my entire capital, I've only used around 20,000 of the working capital to generate these 20,000 in gains. A big part of that came from strong early gain in Palantir, which I sold around $120 a share and rotated into AMD and SoFi earlier this year in March. I just made the positions bigger with the positions I already had, a move that's worked out well so far, because that's already translated into a 10,000 extra in profit. So let's go into what I'm actually holding and why these are my current positions. I will talk about Adobe, AMD, e.l.f, SoFi, but I will not talk about Fubo because that will be a stock that I will be closing. So Adobe, it is a creative software giant. It is Photoshop, Illustrator, Premiere Pro. Its growth is 10 to 12% annual revenue, $6 billion in free cash flow. The moat is deep integration, brand trust, and high switching costs. Its plan is a long-term hold, and it is still a compounder. Then we have AMD, chips for gaming, data centers, and AI workloads. They will have their earnings this week. Growth is re-accelerating in revenue driven by AI server chips. Strong margins is the profitability, and the mode is innovation, speed, and product depth. My plan with AMD is purely simply buying the dips. Then we have e.l.f. Beauty, viral, affordable cosmetic brand. Its growth is 70% year-over-year revenue growth. Mode is Gen Z branding, pricing power, online presence. Profitability is expanding its margins. Plan with this is core small cap position. So yeah, that's what that position is about. Then we have SoFi. It is a digital bank, loans, credit, investing, saving, and it is also a fintech. Its growth is at this moment 25 to 30% year over year. Last quarter, their revenue was 44% in growth, which is very remarkable. Then we have the moat. It's bank charter plus full stack finance. We have the profitability, reached GAAP profitability recently around a year and a couple months ago. The plan is long-term fintech bet, and I will be adding more until I get to 1,000 shares, which is just around 150 shares to go. So I'm sitting on 16,000 euros in cash, ready to invest during volatility. Cash is optionally, and I use it selectively when prices go red. My strategy is to stick with my core positions while adding 3 more high quality names that I believe can outperform over the 5 to 10 years. But I am waiting, and I do think that in now and 2 months there will be a pretty nice correction. So it will be nice to get into that correction and keep most of the cash free for that. So I'm looking into that bit, but of course you never know. The first one I'm looking into is Amazon. I already had that position, but I closed it because I wanted to go into another one. But at this moment, I want to reopen the Amazon position. I had a little bit of profit on it, and so I want to reopen it. So Amazon is the cloud with AWS, Prime, logistics, ads. Its mode is global scale, infrastructure, data advantages, profitability strong and improving. Plan at steadily long-term hold. It's just a steady position in bad times. And if you look at the chart, we have the 1 year chart time. This is actually a very nice moment to get into the stock because its earnings were pretty good and steady. It was just a little bit of a question with the AWS and all of those things, but in a whole, Amazon is always a big strong buy if you look at the whole company and its forecast. And if you look at the chart and you see something like this, when we go back to the levels of around June, we went up pretty nice, and we are now August, so we are back at the levels of last month. So it's a pretty nice get in now type of time. Yeah, it's a nice dip it had while the numbers were actually pretty good. So I do think that this is a nice moment to get into the stock. But again, I want to be cautious because I do believe that in 1 to 2 months there will be a correction, and I want to be on a big cash pile to get into that correction with all of the cash. So I will start a position around this month, but I will not go too much into it because I want to keep some cash. But the position will be started this month because of this pullback with earnings being pretty good. So yeah. Then we have Shopify. Let's see where they are at with their chart. So also at 1 year. At 1 year also, its highs of this year were almost $130. So now they went down to 115 and stand at 118 at this moment. So it is also, if you look at 1 year chart, a nice positions to get in. If you know on the long term, this is a nice growth stock and is always very good in growing its business. If you look at it, it's e-commerce infrastructure powering online brands. Its growth is around 25 to 30%, moving towards solid profitability. The mode is ecosystem lock-ins, so actually almost every store you go on online, it will probably be used by Shopify. So that's a very strong mode. The plan is to scale in before the next leg up. Also, they will give their earnings this week, so probably making a position before their earnings. Not too big. Also had a position around a half year ago or a year ago. And also in that position I had a little bit of profit. So I will make a new position into this one. But also again, I will be keeping a bigger eye on the whole market because of the correction that I expect. And a lot of people also expect that correction. So yeah, just as Amazon, I will start a position, but I will wait to make it a bigger position. Then we have Meta. Meta is some position I also want to make because their earnings were also just very good. If you look at Meta for the long run, it will always be a very good position to make. But at this moment, it's probably pretty tricky to get in. So if you get a correction, it will probably go down to like these levels or even lower to these levels. But yeah, then it has to be a very big correction. I do believe around the 620 would be a nice one if we get to it with a correction, but of course you never know where it will head to. So at this moment I would probably buy Meta, but I would be more cautious than Shopify and Amazon, because Shopify and Amazon have a very nice get in now type of chart. So Meta is one you have to look closer into, and that is something I will do right after this video. So Meta has actually Facebook, Instagram, WhatsApp, Reels, and AI. The cash flow is enormous, big buybacks. The mode is network effects and ads engine. Plan is digital advertising anchor. The secret is consistency. I don't plan to change my lifestyle anytime soon. I'll stay at my job, maybe even pick up extra hours or start a small side business to boost my income and increase my monthly investment rate, because in your early 20s your biggest advantage is time and contribution power. If I can consistently pump capital into now, every euro compounds harder later. My focus is strong cash generating business, buy more on red days, stay calm on green days, stick to my thesis, no emotional panic. It's only been 2 years, but I already feel how this mindset and experience is paying off. Now let's zoom out what is happening in the bigger picture. Inflation is cooling, around 3% in most recent reports. Job market is still strong, unemployment near 4%. Interest rates, the Fed is cautious, rate cuts may come in early 2026, but also in September we will probably get our first cut of 2025, but timing is uncertain. Correction risk, yes, after a strong run, a 10 to 50% correction into late 2025 wouldn't surprise me, and would probably even be very, very normal to happen. Recession odds still mixed. Soft landing is likely if earnings stay strong. Probably not this year. Correction, yes, but recession probably not this year. My plan doesn't change. I keep investing gradually. I don't time the market, but I do use it to my advantage, buying aggressively on red, holding through green. So here's where I stand. $54,000 in euros. If you look at the portfolio, 22,000 of that is profit in under 2 years, and the goal is $100,000 by June 2026, which is 11 months away. And then keep going. The second 100,000 come faster, the compounding picks up speed. I stay focused, stay patient, and I keep building, buying very good companies and nice growth stocks in the coming years. And thank you for watching. See you later.